Bitcoin's not working vis-a-vis gold and silver because gold and silver are the easy go-to monetary debasement choice of billions of people who do not understand Bitcoin. The most interesting thing that happened last week, Bitcoin's going up and the Q is going down. So stocks are going down. So the correlation there, it's only 2 days so far that it's happened, but to me, there's a lot of signal there. And so, as it becomes apparent, gold has smelled out the future monetary debasement. Gold knows the reason gold and silver have done what they do, they understand that curve, okay? Bitcoin understands that curve too, but liquidity is tight. Once it happens, Bitcoin's going to explode. It's going to go to 200,000, 300,000 very, very quickly.
You can feel it. Something is off with the global money game. Prices are behaving strangely. Markets aren't lining up with the old playbook. And deep down, everyone can sense it. The system is starting to crack. We're watching gold and silver heat up again. Not because they're fashionable, not because influencers suddenly rediscovered them, but because ordinary people are doing what humans have always done when their currency begins to weaken. They run to safety. It's instinctive. You don't need to be a trader to recognize it. You just look at your grocery bill, your rent, your paycheck, and you think, something's not adding up. As Larry Lepard puts it so well, gold and silver are the first stop for most people because they're familiar and they feel safe. But Bitcoin? Bitcoin is different. Bitcoin responds to liquidity in the system. It doesn't move just because people panic. It moves when the hidden gears of global finance begin to shift. And right now, those gears are grinding. So when you see Bitcoin quietly rising while equities start to soften, don't overlook it. That's the early warning light on the dashboard. Gold and silver might show you the symptoms, but Bitcoin is reading the pulse. And when that liquidity floodgate finally blows open, Bitcoin won't just rise, it will surge, fast, violently, and with enough force to leave every last doubter standing in stunned disbelief. Stick around as we bring you more clips from Larry Lepard's explosive interview to gain more insight. Please don't forget to like, subscribe, and enable notifications for additional in-depth content. Thanks for joining us again. Enjoy the rest of the video.
We're all on the same team, and the enemy is the Keynesians, The enemy is the central banks. And yeah, I'm probably the right guy to play the role of bridging both sides because I'm a combative guy. And so when I get very upset. When I see Bitcoiners attacking gold people, I try and scold them for that. And when I see gold people attacking Bitcoiners, I do the same because I think they're both sound money with different characteristics. And I think Bitcoin will emerge as the winner over a longer time frame. But there's nothing wrong with holding gold and silver if you want something that's less volatile. Right now, they're doing pretty well. And I'm glad I didn't abandon it. But frankly, I think Bitcoin's an easier and better buy right now on a relative basis, and MicroStrategy as well. So look, the fact of the matter is, what I always tell the people who are looking at investing in my fund, I say, look, you want to own things the government can't print because the government has proven over and over again that it will continue to print money in ever increasing size. And that was what, I kind of outlined in the book, how we got to having such a broken system where that's the case. And I would actually say probably half of the gold bugs have accepted Bitcoin as well and own both. I've seen some gold bugs just abandon all their gold and go to Bitcoin, which I didn't do. But I've, and I would say half are pretty dug in and they're negative on Bitcoin. I think there are a number of reasons. Probably the biggest one is that crypto, the broader category of crypto, and Sam Bankman-Fried and what we all refer to as shitcoins, is fraud. And so it's easy if you're kind of doing a mental heuristic to look at the fraud of Sam Bankman-Fried and all these crypto projects where, Mashinsky and all these other guys rip people off and say, oh, that's all bullshit. I don't want to be involved with that. And they don't take the time to do the work to understand that actually of all of the things that are cryptocurrencies, there is one that's truly unique, and that's Bitcoin, obviously. And so, they've thrown them all into the wrong bucket. And I'd say the other thing is some people are very much just tied to physicality and believe that money has to be, sound money has to be a physical thing that the government can't print, and the government's printed a lot of money. And that's a true statement, but you can have an algorithmic version of sound money, digital sound money, and that's what Bitcoin is. So, and like I say, Natalie, I go to these gold shows, and I speak there a lot. I get, some people are quite negative and attack me for doing it, but a lot of them are like, they get it, and I generally, at the biggest gold show I go to, which is in New Orleans, I generally ask, how many of you guys own Bitcoin? And half the hands go up. And I see an analog here with the adoption of the internet. And our generation, we were kind of young boomers when the internet was coming, in. And, originally you had to have a modem, you had to dial it up, you had to put the phone in there, and went tee, 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 you got a green screen. I mean, we needed a browser, we needed AOL, we needed broadband, we needed all the things to make it seamless and easy.
Yeah.
And we're getting that now in Bitcoin. I mean, you download the Strike app and it works perfectly. You know what I mean? But, even 5 years ago, we didn't have that, and you had to buy a hardware wallet. You had to learn how to interface and memorize 12 words. I mean, there were things that my 80-year-old mother was not going to do.
Mm-hmm.
And now, she can say, hey, I recognize I should own some of this Bitcoin. Can I have my Morgan Stanley guy just buy it? And I'm like, yeah, Mom, just buy the ETF. It's pretty simple. And that didn't even exist. So,
yeah,
it's gotten easier. I think Bob made a good point, though, that it also has to do, and you see it particularly here in Naples, where there's a lot of wealth. It has to do with how much pain people have experienced. There are a lot of boomers who are very self-centered and have gotten very rich, and the system works just fine for them. Thank you very much. And, something disruptive that maybe challenges their worldview of how the system ought to work, the system that rewarded them greatly,
yes,
doesn't go over well. I gave a breakfast here in Naples to a big community, the community I live in. And these were a bunch of very wealthy, privileged men between the ages of 60 and 90. And I laid out the case for Bitcoin and why the central banks, what they were doing was wrong. And I received a lot of anger that I was criticizing the system that had made them rich.
right.
Yeah.
What happened is some boomers figured this out. They figured out what we all know now today is very obvious, is that inflation is government policy. It's just, there's natural inflation that
Right.
can't be stopped. And if you were smart enough in the 70s or 80s to see that and to realize that and to get into the real estate business where you could use leverage, I
Yeah.
love that meme where we see, the guy holding the kid up with the basketball,
Yeah.
me thinking I'm good at real estate, and the guy holding him up has said inflation.
Yeah.
You know what I mean? I mean, if you know that there's an inflationary policy and it's going to continue forever, what do? You buy real estate, you lever it up, and the value of the debt stays the same, the value of the property goes up, and you get rich. Sadly, I think our money is going to fail, and I think that's going to lead to reset. I mean, I think, we've kicked this can down the road for such a long time frame now, and society is so broken. I mean, this is our fourth turning model, right? We're going to have very, very high rates of inflation, and there's going to be, just an outcry by everybody to fix it. And so to the degree that Bitcoiners and gold and silver people and sound money advocates can explain it to the world, when it gets bad enough that everybody cares about it, we will fix it, because that's how things get done. When there's a crisis, we'll make the changes that are necessary. And, politicians will arise who understand sound money. I don't know, Michael Saylor will end up as president. I mean, seriously, I mean, I think we will fix this, but the transition from here to there, will be bumpy and there'll be some serious pain. I mean, there is no free lunch.
Right.
And we've behaved as if there is one.
Right.
Here it is. The fact is that what you can see is that the black line is the Federal Reserve balance sheet, which is a good proxy for the reserves in the system. And what the lighter line is a line that shows an exponential growth curve. And what you can see is that the Federal Reserve tried to hop off the line at 2 points, one in 2008, and it led to a big print. And another at COVID, it led to a big print. Well, look at where the black line is now compared to the exponential growth curve line. We're well below it. And so another print is, in my view, imminent. And frankly, it really just started. I mean, in Q4, the Fed, rather quietly and trying to say, hey, there's nothing to see here, folks, stopped QT and restarted QE at 40 billion a month, which when they were floating the trial balloon, they said it was only going to be 25. And they also said that it was going to start in January, but they came out in the Fed meeting in early December and they said, we're starting it in 2 days.
Mm-hmm.
So it strikes me that they had to do it pretty quickly. And so I think we're right on the cusp of it. I mean, I think, and you also see it in the politics with what's going on with Trump and his war with the Federal Reserve.
Mm-hmm.
And we know that the next Fed chairman is going to be dovish. We know that he's trying to get people on the Federal Reserve board who are dovish. He's already got one, Moran. Probably be able to get another one when the guy in Atlanta resigns or his term run out next year. And then, of course, he's going to have the chairman. So my sense is that we are going to go back to a low money environment and print more money. And the Federal Reserve balance sheet is going to start growing again very rapidly in what I call and what others have called the run it hot strategy.
Yeah.
When you've got this much debt compared to your GDP, if you stop, you have massive deflation and a collapse, think 1929, and no politician wants that. And they'll all trade off that against, future inflation by printing money. And of course, once you start printing, the inflation doesn't appear immediately. There's a lag, but it will appear. And so my sense is it's probably in the next year, 18 months at the most, that the printing starts to really ramp up again. And, I think the 9% inflation that we had in the last cycle, that will be exceeded. We'll have, 12, 15, 20% inflation this cycle. I mean, Trump came out and tweeted that he thought, we should have 20% GDP growth. Well, the only way you can get that is with 15% inflation and 5% real growth.
The real fight isn't gold versus Bitcoin. It's everyone against the money printers. For decades, central banks have fueled fake prosperity by creating endless debt and inflation, rewarding the rich while eroding everyone else's savings. But tides are shifting. A new generation is waking up to assets that cannot be printed, controlled, or inflated away. The coming big print will not just test markets. It will reveal who truly understands money and who is still holding on to comforting illusions. Every financial cycle tells the same story: too much debt, too little truth, and a desperate rush to print more money. Inflation becomes the silent thief, stealing value while politicians act like it's progress. Gold and silver are already flashing warning signs, but Bitcoin waits for its moment. Once liquidity returns, it doesn't crawl, it explodes. History shows that every reset rewards those holding real assets, not promises. When the next wave hits, only sound money will survive the storm. Let's watch more clips from the interview.
The only way to print away the debt is to have massive inflation. I mean, we did this after World War II. It's called yield curve control. We did it, and we had this much debt to GDP in 1945 because we'd fought a war. And the Federal Reserve did yield curve control from 42 to 51, where they held interest rates at 3/8 on the short end and 2.5 on the longer end. And, we got out of that mess by, one, there was really high inflation. People don't realize this. You go back and look at some of the monthly inflation numbers. There was like 20% inflation one month in 1949. And then we also had, the benefit we had then is that we were the one country that wasn't damaged by the war. Japan and Europe were just on their knees. And so, we started building stuff and exporting it, and that led to a lot of growth, and we kind of climbed out of that hole. We don't have the same set of demographics, and we've got a lot of serious competitors in China, Japan, Europe, et cetera. So we're not going to have that as a solution. And my sense is that, this is going to ultimately lead to very, very high rates of inflation. And then you get the question of, do you do a monetary reset? Have the courage to reset to Bitcoin and gold, or do you just let the inflation keep running? And that has to do with the politics of it all. And that's why I wrote the book, to try and educate people of the fact that we need to get politicians who understand that returning to sound money is the way to solve this problem. I want to address something you mentioned earlier, though, Natalie. I think it's important. You said, why isn't Bitcoin working? And I know, and trust me, I'm a massive Bitcoiner. I'm a massive gold and silver guy. Bitcoin's not working vis-a-vis gold and silver because gold and silver are the easy go-to monetary debasement choice of billions of people who do not understand Bitcoin. And so what you're seeing right now is the monetary system break very clearly. I mean, look at what's going on in the price of silver. It's insane. And it is expressing itself in the precious metals first. And Bitcoin is much more of a liquidity indicator. And that tells you that right where we are on that curve tells you that liquidity is tight, and therefore Bitcoin is not going up rapidly, although it's been going up rapidly last week. And there's an interesting analog on this. If you go back and you look at, and I remember this very clearly. So in 2019, Powell pivoted. And in early 2020, COVID erupted, right? And they printed a shitload of money, right? We know that. And gold at the time, went from 1,200 to 2,000 really quickly. And I remember it quite well because I owned them both. And I thought, God, this gold stuff's really working. And Bitcoin was flat at like 5,000 to 7,000.
Yeah.
All my Bitcoin friends were like, what the fuck's going on? I mean, they're printing a ton of money. Gold's going up. My shit's not moving. Well, then one day it's like that Christopher Walken thing about the lion. Every now and then it just wakes up and has to show you who's boss. And suddenly in like July of 2020, Bitcoin went from 10 to 60.
Yeah.
It went up 6x in 3 months, right?
I mean,
that's what's going to happen here. Guys that I really respect, like Luke Groman, have made the mistake of selling their Bitcoin. They don't understand what they own. They don't understand the optionality here. Fred Krueger wrote a book called Bitcoin 1 Million, which I highly recommend. And there's a statistic in that book which is stunning. Between 2018 and 2024, Bitcoin went up 700 or 800%. If You missed the best 10 days, you were down. So we're gonna get God count. And Luke is sitting there thinking, well, it's gonna go to 60, and therefore I'm gonna sell it at 90 and I'll buy it back at 60. Well, good luck with that strategy.
Yeah.
Because you're gonna wake up one day and it's gonna be 150 going to 250. And how are you gonna get back in?
Yeah.
The case for Bitcoin is the same as the case for gold and silver, which is, really originally laid out by Lynn Alden, in that nothing stops this train. We've got a broken governmental system where the government can spend money to buy votes. And therefore, they think that those votes are free, but the money they're spending, they don't have. And so in order to fill the hole, they print it. And so everybody in America constantly suffers from having their savings debased year after year after year. And the only way to stay ahead of that is to own assets that will keep up or exceed that debasement in terms of price performance. And the three most notable assets, and the fourth is real estate, but the three most notable assets are gold, silver, and Bitcoin. And Bitcoin is better than gold and silver because it's digital, it's easier to store, it's cheaper to store. And more importantly, it's also undergoing an adoption curve. So you're not, look, gold's been around 5,000 years. You don't have to tell anybody about gold. It's not new. If you want to own gold, you already own it. Whereas, if we go out and you ask the person on the street, do you know about Bitcoin or do you own any Bitcoin? Half of them don't even know what it is. And then of the remaining half, probably only 5 or 10% own some of it. And yet it's better than gold. And so all of those people, just as all the people who didn't think they needed a PC now have one, all of the people who do not own any Bitcoin today, they're going to own it in the future. And so if you buy it today, you're buying something that everyone's going to want. It's what Michael says. It's inevitable. Everybody needs it, and they don't understand it, but they're going to come to understand it. And so it's really quite an amazingly asymmetric asset. The ARR, the average rate of return right now is about 40%. Even after 10 years, when it should be at $1 million a coin, it's only declined to about 30% a year. So, and you've got no management team risk. Well, minimal management team risk if you throw out core. You've got relatively low management risk. And so, buy Bitcoin and just live your life. I mean, this is incredibly easy compared to trying to pick stocks.
Markets right now feel like a pressure cooker. Bitcoin just bounced back towards $79,000 after a brutal weekend sell-off, but it is still struggling to hold ground. Ether is also trying to recover, yet both remain down sharply over the past week, while traditional stocks like the Nasdaq and Dow keep chipping higher. Gold and silver saw their worst single-day drops since 1980, and crypto stocks are bleeding value as forced liquidations rip through leveraged positions and traders scramble out. This backdrop perfectly illustrates a deeper truth about today's financial system. Central banks and governments have been papering over debt with easy money for years, slowly eroding confidence in fiat currencies and pushing investors into real assets. As Larry Lepard has warned, that dynamic plays out differently across markets. Precious metals often react first to stress, while Bitcoin can lag until liquidity returns in force. When the next big wave hits, Bitcoin's explosive potential could catch many off guard. Right now, traders are watching jobs reports, PMI data, and Fed signals for clues on rate cuts or further easing. But beneath those headlines, the fundamental tug-of-war between inflationary policy and sound money continues. Whether you're a long-term believer or a price-action trader, this moment is about understanding not just where prices are, but what the market is telling us about trust in the system and where value may ultimately flow. As we wrap up, if you had to choose between gold, silver, or Bitcoin, which would you trust most? Let us know your thoughts in the comments below. Share this video and hit the like button. Thanks for watching. Don't forget to like and subscribe.